Hello, my name is Steve Bigelow with the Candlestick Forum. The market is still heading down, but there are a couple sectors that are trading with good positive bullish signals and an uptrend. So the strategy is you probably want to be essentially short with a few long positions in the portfolio. You can see what happened on the Dow on Thursday. We had a bullish engulfing signal right on the 50-day moving average, closed above the T-line, opened positive. That would have been a strong indication there was a reversal had everything else been confirming. First of all, we weren't quite in the oversold area. Now, with it closing back below the T-line by the end of the day, remember our T-line rule probabilities. But as long as you're not closing above the T-line, the probabilities are pretty strong you're in a downtrend. Now, the reason you wouldn't have jumped into long positions with any great resiliency is because over on the Nasdaq, they opened at the T-line and immediately started trading lower, telling us this uptrend hasn't started yet in the Nasdaq or the S&P 500. So with this type of market indication, that allows us to go after some very high probability option trade factors. Now, before I start that, I want to address a comment that we had in YouTube last week, where somebody said, yeah, it's easy to see all these trades after you've shown they've occurred. I hope you can see that the whole point of showing trades that have worked is to show why the different candlestick patterns or what the results are of different candlestick patterns. When we shorted DWAC, it was based upon a dumpling top closing below the T-line, and this was our expected result. So we're not showing charts to say, yeah, we are great. This is what we did. What we're trying to illustrate is the fact that the reason we did it was based upon this type of pattern. Hopefully, you're seeing in YouTube illustrations that when you see something like this, or it's illustrated something like this happens, we're also illustrating a pattern that is setting up for that same thing. That this is an area where you start getting ready to go short because what's the expectation coming out of a dumpling top? A strong move to the downside. So if the indexes in general are heading lower and you're seeing dumpling tops, this just improves the probabilities of being in the right trade at the right time. And the right trade might be that if you're an option trader, maybe you're buying puts here, or if you want to be a little bit more aggressive, maybe you're buying put spreads. So this is what we were trying to illustrate on some of these charts, that when we see candlestick sell signals and close below the T-line, this is the time where you might want to be buying puts. But after you've had a strong price move and you can see a possible J-hook, bearish J-hook pattern, that if it opens lower and starts trading lower on Monday and Tuesday, breaking this level, now we could be looking at a wave 1, wave 2, wave 3. But what are the probability factors? Buying puts and after a sell signal in the overbought area, that's a pretty high probability. But we've lost some of that probability factor now that you're in the oversold condition and expecting another wave to the downside to kind of mitigate that risk. Instead of buying puts, it's very simple to buy a put spread where you have less money exposed and your rate of return is still extremely high. This is the type of illustration we're going to be doing in our full day training on this coming weekend on April 23rd. Join us and see what the logic is that when you analyze a candlestick chart and know which way the price is going to move with a much higher degree of probability, and that you have a factor to work with where a lot of the candlestick signals and patterns will illustrate how big or where the next potential target that move will be. This is where a lot of option trade strategies are greatly enhanced, knowing that information. Now, the sectors that seem to be working are your shipping stocks and your airline stocks. So here was another example where we were illustrating the fact that we know the airlines are working well, as our recommendation on Delta was based upon this bobble breakout. But it's an uptrending sector in a downtrending market. Might have a little bit tougher move just because of investor sentiment overall is negative. So this might be a case where instead of buying calls, you're buying call spreads because of the risk factor. And the shipping stocks are acting well too. So here's a J-hook pattern on ASC coming out of a little fry pan bottom. The implication is that there's going to be more upside. Anyways, that'll be it. Again, join us April 23rd for a full day option training. Our mantra is that you're going to get a heck of a lot more information than you expect. So join us. That'll be it. We'll see you in the chat room.